What we're going to talk about tonight isn't like a small thing. It's actually very, very valuable information to you. It's literally worth at least hundreds of thousands of dollars, if not millions of dollars over your lifetime. And if you take in this knowledge and apply it correctly, then you will retire sooner. You will provide a very good life for yourself and your family, and you'll have something to leave behind as a financial legacy when you do pass from this world into the next, okay? Mindset shifts, there are 8 of them. Now, the first one is that you haven't been educated yet, right? You've got to realize that if you haven't been educated, then that's probably why you're not doing very well. Most of us are born into low to middle income families. We don't get taught this stuff in school, okay? So what are you going to do about it? Well, you got to get educated, right? And as soon as you understand that most people, that 99% of people have no idea what they're doing with their money, right? As soon as you understand that, the sooner you can move forward. Number 2, you're not better off doing everything yourself, okay? We talked about that already. Must put together an expert team around you or you will fail, okay? Think of everyone who's successful. They've all got a team around them. Number 3, money will make you happier. There's a whole heap of things that poor people say to other poor people so they don't feel bad about being poor. And money won't make you happy is one of them. Money's the root of all evil is another one, okay? Understand what a real asset is. Most of us are taught wrong. Most of us think that our assets are the things we own of value. But there are things that we can own that will make us money, and there are things that we can own that will lose us money, okay? Now, a real asset will make us wealthy. The real asset has 2 additional criteria. Goes up in value and produces an income. Now, most people would list their car as an asset because it's of value, but it goes down in value, not up, and it sucks money off us instead of giving us money, right? Your car is a liability. Realize that, teach your kids that, okay? Now, remind me at the end of the webinar to teach you how the rich buy their cars. I was taught this by an Australian billionaire. It's a very, very different mindset. And a lot of people just go, wow. So if at the end of the webinar, ask me that question and I'll teach you. It's not on the slides. All right, your own home of value goes up in value, righto, but doesn't produce an income, okay? So it too is a liability. The increase in value is irrelevant, and that if that's the only thing we own, we're gonna have to sell that increase in value in retirement to survive. Investment property of value goes up in value and produces an income. It actually produces 2 incomes. It produces a rent and a tax return. Okay, a real asset. What else can we buy that meets the definition of a real asset? What else could you own that would go up in value and produce an income for you? No one wants to answer. What else could we own that goes up to that? There you go, stocks or shares. Okay, let's talk about shares. So shares, what are they? That's when you own a minority in a big company, in a big corporation, right? And the thing about the key, there's 2 things to know about shares that are really important. And if you're right into shares, listen to me carefully, because this is something that's really important for you to understand. The first problem with shares is that the dividends are not guaranteed, and the second problem is that it's not leveraged. So dividends not guaranteed and not leveraged enough is the 2 problems with shares. We'll talk about that. What does that mean? So what's a dividend? When a company makes a profit, the management of that company have to decide what to do with the profit. And they've got 2 choices. They can reinvest the profits back into the company, or they can distribute the profits to the shareholders, and that's called a dividend, okay? Okay, good debt is debt that's used to make money with, okay? Bad debt is debt that's used to buy things that lose money, like cars and holidays and weddings. I met a young couple, they got a $40,000 personal loan to get married, and they said, you only get married once, Daimien. And I said, there's a 55% chance that that's not true. And then this is what happens to a lot of young people. They get into debt to buy things that lose money, and then they spend the next 10 years trying to pay all that bad debt off, you see. But there's good debt and there's bad debt. And there's another saying, no one ever got rich about getting into debt, but it's good debt. It's okay to get into debt to buy an investment property or a business if that property, if that real asset is going to pay that debt off for you, okay? But it's not okay to get into debts that you personally have to pay off, okay? And that's the key difference. Understand the difference between good and bad debt. How an investment property works. The cost of owning a property actually go up with inflation. You know, the maintenance will go up, the council rates will go up, the insurance premiums go up. and then there's a sudden drop at the end. Now that sudden drop at the end